Hello, from Otet Markets. This is Sahura and will be with you to review the US inflation and labor market data and market reactions. As always, let's first check the data and then we can see how market can react to these data. First of all, the inflation numbers. Somehow we had a surprise. Negative surprise actually, or we can say better say the positive surprise for customers, because consumer price index or customer inflation fell by 0.1% in March, which is very good news for consumers, as they can get the prices, they can get the goods with lower prices, especially as mentioned, especially while they had almost 0.3% average income, increasing average income. So when they have, if the prices is low, so we can say the market it can be the good news for the consumers. On the other hand, the headline inflation, while the headline inflation fell by 0.1%, as you can see here, the core inflation, excluding the food and energy prices, increased only 0.1%, which less than 0.3% expected and 0.2% previous months. Generally, we can say that these data means that the inflation is really under control. On the annual scale, the core inflation increased only 2.8%, lower than 3.1% in the previous month and 3% expectation. So the core inflation also finally fell under 3%, while the headline inflation annually increased only 2.4%, much less than 2.8% previous month and 2.5% expectations. These data says that the inflation is under control, but we shouldn't forget that analysts believe that these numbers still is not affected by the tariffs. So with the tariffs affected data would be probably published in I mean, we can see the effect of the tariffs probably in May numbers when we are going to see the operating inflation. So with these data, as mentioned, since don't forget that in the previous days we had too many speeches from Fed speakers, and these Fed speakers they were talking about that to see how the tariffs can affect the market. We need more time, so the Federal Reserve is not in hurry to cut the rates. That's caused the possibility of a rate cut in next meeting fell to less than 20% from previously 37, more than 37%. So right now, still, I mean, we can say despite the lowering inflation, still the market believes that the Federal Reserve will be more cautious, especially as mentioned earlier, that the data that we had so far, the inflation numbers that we had so far, it's not adjusted with it's not adjusted data with the recently mentioned tariffs. About the tariffs, I have to say that Mr. Trump paused the tariffs for 90 days for all countries excluding China. The Chinese inflation, the Chinese tariffs, even thought it increased from 100 previously 4% to 124%. That means that the escalations in the tariff tensions is still increasing, and we have more escalation there. We need more time to get the results. Let's check these data affecting the market. So with the lowering inflation, generally, we can say that the market now counts on more rate cut options in the next weeks, which means that probably in 2025 we can have 3 rate cuts, not 2 rate cuts. So I mean, when the inflation is lowering, we can say we can give more chance for rate cut, as the market sees that okay, inflation is under control, so the central bank can support the economy with lower interest rates, especially while the ongoing trade tensions or the trade war can slower the economic growth as well. On the other hand, so while we can count on that, at the same time we can be more cautious, as mentioned, because these data and these numbers, they are not adjusted with the newly implemented tariffs. So to see how the tariffs can affect the inflation, we need more time, and we need to wait until May to see the April inflation data. That's why US dollar index slightly lowered, fell slightly, but there is less chance right now to see US dollar index around 100 or lower or lower 100. So most probably we can see the 101 and 102, the trading between 101 and 102 for now could be more reasonable or more this area. Well, it's somewhere around this. So this area, probably this area will be more reasonable and will be more logical area to see it as for the US dollar index is lower than 101 need more reason to see to go there, while above 102 also is not logical right now. The more chance for rate cut means level more dovish policies, which is a negative for US dollar index. At the same time, while it's negative for US dollar index, about the stock markets, um, stock market still is affecting by the tariffs. Like this, after too much lowering, this green candle here is right after the news that Mr. Trump paused the tariffs for 90 days. But at the same time, it cannot go further because the tariffs are the second biggest economy in the world still is there, and even thought it's increased to 124%. So escalation is there. So the tensions, tariffs tensions or trade war tensions is there. So it's not lowering right now. At the same time, we don't know still the effect of tariffs in the production, in the supply chain and stuff like that. So that's why the market will be more cautious. So this data, these numbers, these inflation numbers, it's not, we cannot say that it's a positive data for stock markets, but at least it can slow down the downtrend in the stock market. So our general perspective for SP 500 and gold stock is not changing. Overall downtrend still can continue, but with much lower pace, especially as mentioned with the pause in the tariffs. As for the cryptocurrency market, these data is not such a good or such a bad news for the cryptocurrency market. It's not something that we can use. Inflation is not right now, especially with the 1 month. It's not something that we can say, okay, this data can support the gold or can support the, Bitcoin price or cryptocurrencies market generally. This data generally means that still the cautious in the market should be high. We have to watch the data numbers more cautiously and wait to see the tariffs effect on the market. That's why it's not a good or bad news for the cryptocurrency market, but generally it's not a good. I mean, when we are talking about if it's even if it is not a good or it's not a bad news, the weight of it's not a good news is more. It's weighting. It's putting more pressure. I mean, in the market. So it's not a good news. We can say we can put it in more highlighted. It's not such a good news. So generally, the negative outlook for stock market is not changing. Thought expectations, we can expect some uh, corrections. For the for energy, it's a good news. Somehow it can slow down the downtrend as dovish policies can support the economy. At the same time, the reason that the gold is the oil and the energy price could be a little bit more cautious and more actually positive these days is because of this pause in the tariffs for 90 days. So these pause can be somehow, we can say this green candle that you can see here is yesterday's. This is what happened yesterday after the pausing of the tariffs, but still the market, as mentioned, is not too much positive about the tariffs, but it's not about ending the tariffs, ending the trade tensions, especially with the 104% tariffs on the Chinese good. But still, the market is somehow slightly positive. So it slowed down the downtrend and can hold the prices around this level. This news generally still is good for the for the oil, for the gold market as a slower and weaker US dollar positive for the gold. At the same time, the cautions about whether this data is affected by the tariffs or not is also still increasing the cautions there. 124% tariffs on the Chinese goods, also increasing the tensions there. So generally, the data in the market still is a positive for gold, and gold uptrend still is there and can continue further. As mentioned for US dollar, right now 101 and 102 is the area that we're expecting to see dollar index for the next weeks. Generally, that was the data and the market reactions. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye.